Hello everyone, this is the pre-market report video for today March 17th in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday I was afraid that our Indian market might crash, but it's not like that. It was just normal Thursday with a little bit more European market induced volatility. Last Wednesday night in US, both India's IT and banks ADR fell by over 2 to 3%, which was really scary, and still I don't know the reason why it fell so much. Anyway, none of that was transferred to our spot market, but the Credit Suisse issue and European Central Bank interest rate hike expectation made the Indian market really volatile, but still it closed marginally positive. Sector-wise, metal index fell nearly 3%, while pharma, oil and gas, power, FMCG, realty index increased 1% each. At the end of the day, for the 6th straight session, FII turned net sellers. The net sold shares worth approximately 280 crore rupees and DI net bought shares worth approximately 2050 crore rupees. So that's what happened yesterday in the Indian market. Now coming to US market. Last night, before their market opening, after the Indian market hours, European Central Bank raised the Europe's interest rate by 0.5%. Then there were a couple of bad US macro as well. US Department of Labor released the data of number of people filed for unemployment benefit claims. Again, the number of people applied comes as 1,92,000, which is sharply lower against expectation and the previous week data, which was over 2 lakhs. Then, US Census Bureau released the change in the number of new building permits issued by the government for the February month. And it comes as over 1.5 million new permits against expectation on the previous week data, which was near just 1.3 million. This indication of strong labor market and new house building made the CME FedWatch tool to increase their probability from less than 50% to over 80% that Fed will increase the interest rate hike by 25 basis points in the upcoming FOMC meeting. Even the prediction tool, it's kind of a roller coaster. One day saying 50 basis point rate hike, yesterday no rate hike, now last night and today 25 basis point rate hike. It's just crazy. Anyway, all this made the US market to open negative. Then there were two incidents that changed the momentum completely upside down. First, Swiss National Bank announced that they are going to give loan as over $50 billion to Credit Suisse. Then in US, 5 big banks such as Bank of America, Citigroup, JP Morgan and Wells Fargo said that each they are going to deposit $5 billion into First Republic Bank. Additionally, Morgan Stanley made the deposit of $2.5 billion. Basically, all big banks joined together and saved the First Republic Bank. These two incidents lifted the momentum and turned the US market to super duper bullish. In the end, Dow Jones increased over 350 points or 1.17%, S&P 500 increased by 1.76% and Nasdaq rallied by 2.48%. Nasdaq rally was equivalent to 400 points increase in Nifty in one single day. Day before yesterday, VIX was increased over 10%. Last night, it reversed and decreased to 12% to under 23. And all tech stocks literally become super duper bullish. Google, Amazon and Facebook rallied around 3 to 4%. Google increased near 4% as they said that they are going to increase the subscription service fee for the YouTube TV in US. Surprisingly, 10-year Treasury bond yield increased near 2.5% to 3.58 and the dollar index too marginally increased to 104. Regarding oil, it's roughly the same. At this time of this video, Brent crude oil was traded near $74.5 per barrel and WTI crude oil was traded near $68.5 per barrel. Coming to SGX Nifty, day before yesterday at 3 am Indian Standard Time, it closed at 16,925. Today at 3 am Indian Standard Time, it closed approximately 250 points up at 17,173. It's kind of indicating gap up opening of over 100 to 150 points. About Indian ADRs, the story is not different. Infosys and Wipro ADRs increased approximately 1.5%. Then regarding banks, HDFC ADR increased over 2.5% and ICICI Bank increased by 1.77%. So clearly at present the global momentum is kind of turned positive temporarily. It doesn't mean that we are completely out of the woods. Anyway, moving on, coming to stock specifics. First, I don't know whether it's positive or negative. Yesterday, TCS CEO Gopinath resigned his position. He was CEO in TCS for the last 6 years. Then, regarding new CEO, it's up to shareholders' approval. TCS long-term employee called Kirti Vasan, who was working in TCS from 1989, even way before my birth, was nominated for the position. Just for info, under previous CEO period in 6 years, TCS share price have nearly tripled, revenue has almost doubled, and profit has risen about 60% as of last quarter. Meanwhile, TCS rival Infosys is also facing top level attrition. In the last 1 year alone, 5 senior level people left Infosys. Then the second info is regarding defense. Indian government approved worth of 8.5 billion US dollars for defense purchase. And of course, the major beneficiary will be HAL, but the stock price already rallied over 80% in the last 1 year, but this news is clearly positive. As a summary, last night US market rallied and it was super duper bullish. Today morning, SGX Nifty was up by near 250 points compared to previous day early morning close. IT areas and bank areas increased from 1 to 2.5%. So this is kind of indicating a very good opening today. Only TCS looks a little uncertain. Let's see. Then the next topic about the items we need to look out for today. Only at 3:30 p.m. Indian Standard Time, after our market hours, Europe's consumer inflation data is scheduled to release. So we don't need to bother too much today since we can see the impact only on Monday. Coming to technical, in daily chart, Nifty forms a 6th consecutive bearish candle. However, the good news here is it's a short bearish candle with a medium upper and longer lower shadow. Basically, it's a doji candle. It's kind of indicating the indecisiveness among the buyers and sellers about the future market trend. Anyway, at present, Nifty is trading near its lower band, so the most probable scenario is moving above. But sustaining that in short term, I strongly believe that should be based on the US interest rate decision next week. Anyway, if Nifty breaks 17,000, then it will move closer to 17,200. Then regarding Bank Nifty, after 5 days, finally it break away from bearish candle formation and forms a bullish doji kind of pattern with a long lower shadow indicating indecisiveness. Which means from overwhelming negativeness, it turns to be neutral. It's kind of hinting at the possibility of bounce back after few sessions of selling pressure. Then regarding moving average and technical indicator summary, at present for both Nifty and Bank Nifty, it's just a strong sell, no change on that. Yesterday was the weekly options expiry. Analyzing options open interest might give some misleading data, so I don't prefer that. Thus, from pivot chart for Nifty, at present the immediate support is present at around 16,885 and strong support at 16,750. On the higher side, the immediate resistance to break is at 17,100 and the strong resistance will be 17,180. Then in terms of Bank Nifty, the support is present at around 38,550 whereas the immediate resistance is at 39,520 and the significant resistance is at 39,810. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.